Ladies and gentlemen, as posted on social media since 9:30 EST this morning, my bias remained firmly bearish. We've been stuck in worthless bearish corrections. We ignored that completely, and then we took S&P down from 1966. So why is the price stuck right now and dancing in a bit of a pickle? Because it's reversal zone to the downside. 5 points later, buyers can stage a bit of a push to the upside. I'm adjusting trail even closer, 1963.75. Anybody surprised the buyers will step in? Absolutely not. That's what happens every time price comes to reversal zone. Formula remains the same. Doesn't matter if you trade Apple monthly or S&P non-time based charts. That remains the key. Every single person trades different lot size. Knowledge and execution in day trading is everything. We absolutely ignored worthless fluff, worthless correction. And here we are. Clear? 5 points later. So here's the buyers, as expected. Will buyers step in with vengeance? We are at reversal zone of the downtrend, and that remains the key. So here we are, the dance is on, more than 5 points later. Price blasting through this level, we're respecting short trend as major on hourly chart. S&P in free fall. Anybody surprised? Reversal zone is a big problema and a big dilemma. Price still did not blast through this level, did it? How did we know to expect buyers to come from this level? Simple. Price and Fibonacci told me so. That's all that ever matters. You never need anything else. Just rule-based trading, price and Fibonacci. What you trade is up to you. I warned you about the collapse that was playing out. That's just the beginning. And we know exactly what's causing the pain. Correct? This is the area. S&P needs to get out of reversal zone 1 to the downside, which correlates with last stopping ground on our very small non-time based chart. Won't that be magical if S&P will finally get out from reversal zone? This trade will migrate into hourly chart. Clear? Crucial moment. And this is what happens if you play by the rules. You become a hunter of the markets. You ignore all the background noise. Nothing good possible in life, nothing good possible, especially in trading, without rules. And that remained the key. My bias remained firmly bearish. This is one last stopping ground. We're blasting through. This fun had just begun. Too bad, so sad. Buyers picking up this team, ladies and gentlemen. Are you clear about the importance of reversal zone and respecting Fibonacci levels? It's all firmly the same formula. Doesn't matter if you knew when to get out of your long trade on Apple. What happened to Apple when it came to reversal zone? Completely expected. The collapse had just begun. This exact same collapse on S&P, more than 5 points later, ended at reversal zone 3. It is not just non-time based chart, crucial support level. It is crucial hourly reversal zone, which I've been warning you about. Still remains huge obstacle. 5 points on S&P, one lot size, 250. 10 lot size, 2500. Every person has different account size, but as long as you have long-term view of success, you recognize trading is about quality. And if you remain consistent on S&P, you can add 1 lot size per month. You only need a couple of trades per week. But what is essential and crucial is to know when to walk away from computer and when not to babysit the fluff, as I warned you ongoingly this morning. We waited patiently and we took S&P down as soon as obstacle presented itself. This is just the beginning. The dance remains. In order for collapse to continue, we have to get out of this area. If you're buying at reversal zone without powerful pullback, your success rate 20%. Last chance to enter S&P, decision point 2. If sell-off will continue and we will see S&P at this level at the market close, we will be all over it with my students to take long trades. But always and forever, only if rules are met. Rules are not met, no trade will be taken ever. So let's update our trade. It's trade number 5. This is only second morning. We are open in October. 4 trades are positive. We respected decision point 2 as our first target. And our trade blasted 2 number of targets. Correct? This is all there is. Pure price for entry and Fibonacci for exits. You want to trade ETFs? You want to trade options? Why not? Choice is yours. Formula remains the same, as price remains the same everywhere. So second bearish trade of this morning, will S&P blast through these crucial hourly levels and collapse finally once and for all? That remains the key. So that's where we are at 12:05 EST. Multiple opportunities to get out of this trade. Break even or a point. As I always remind you, knowledge is power. Babysitting and staring at the screen does not work. Market spelled out to us early this morning. This was expected. Market is frozen, buyers are exhausted, and sellers are weak. First trade collapsed 5 points, took a while. This trade gave you multiple opportunities to get out at break even. We've been here for the last hour. I wish you marvelous afternoon. And I always encourage you, never ever 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 trade without Fibonacci levels. Can S&P crawl up to this level? Yes, it can. But you're witnessing what a crawl that is. Tomorrow morning we will review what will happen at the end of the minor trend near these levels. How powerful will the selling pressure be? Will it be weak or will it be powerful? When it comes to day trading, we expect meaning. When it comes to position trading, it can be very weak pullback. Do not ever acquire position near the end of the minor trend. By the time you come to the end of the minor trend, you know incredibly well that this is the most crucial resistance level in the market. So ciao, kapao, trading room. Back tomorrow morning.